We're going to be discussing the risks to retiring early on YMAX and ULTI. We just did videos on YMAX and ULTI and retiring early on them because they help us earn over $700,000 per year in dividends. But I just want to make sure that all of my viewers are safe and are aware of the 5 risks to retiring on YMAX and ULTI that I've identified in my portfolio. We earn over $700,000 per year in dividends, as I was saying, and the market was down big Friday. So I just want everyone to be aware of these 5 risks. We're up 16% for the year, 17% if you're rounding. The S&P is up 4, the Nasdaq's up 4, the Dow's up 1, and the Russell's down 3. So we lost about 3% on Friday because we do have some small cap exposure, and the Russell was just flat before last Friday, roughly. So that's why we had a little drop in our performance, and it was also tied to some Yieldmax funds, and I want to discuss that again in today's video, okay? So we're still living financially free out of our brokerage accounts using Yieldmax, Cornerstone, Margin, and other dividend-paying funds. We're outperforming all the indexes. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. You can also head to my website, Unconventional Wealth Ideas. We're leading the fire movement here, as I always say, and you can see all of my testimonials. We have over 100 here. These are just comments from all my videos, from the last few videos that I've been able to grab. So these are the testimonials. You can see more about my e-guides here. Here are all the bundles. When you buy my bundles, my phone number and Discord access come free for life. All right, so we are here at the Yieldmax closing bell. There's some, more information about me for that ceremony. You can find out more about me and my followers here on my website, okay? So again, the 5 risks to retiring early on ULTI and YMAX, they're very important, okay? I don't think viewers are trying to manage risk enough in their portfolio. So our margin debt right here, it's around $500,000, as you can see. But my dividends of over $700,000 will pay back my margin debt in less than a year. So where's the risk for me, okay? Even with Yieldmax, even with ULTI, where's the risk if I'm doing this all properly, okay? My dividends are going to pay back my margin debt. So the only risk would become investing in YMAX and ULTI themselves. It wouldn't be margin being a risk because, again, my dividends pay that back in half of a year, essentially, in less than a year, 6 months. So what's the risk? It's not my margin interest because, even though I'm holding a lot of margin, I've negotiated my rates down twice. They're under 5%. Many of my clients who bought my e-guides did the same thing. And now I'm actually absolutely inundated from text requests, texts asking for scripts. But anyway, we'll get to that in another video. $500,000 is my margin debt, and $800,000 roughly are my dividends. So my debt will be gone, and then my account will grow by the equivalent amount of my dividends. So 1.6 million, you'll see us grow. If we had 600,000 in dividends, let's say, it would be 1.2 million after we receive those dividends. The margin debt would go to zero. My market value would grow. In return, it's just like real estate when you reinvest into your house. All right, so that's the principle of investing with margin, okay? And a lot of people think, wow, you're really risking it with margin. But again, my dividends pay back so fast. Where is the risk? It's just in the funds themselves, which we're going to talk about today, okay? The 5 risks. All right, so with ULTI, we all know that ULTI has higher risk holdings, okay? ULTI, we know it's a high yielder, okay? 85%. And look at the holdings within it. It has some quality names, but it also has some high risk names. All right, so you're going to see Marcos and I talk about this in another video coming out soon, really doing a deep dive into the risks and the holdings. So stay tuned for Marcos's video. So these holdings are quite risky, but they're hedged. Okay, so on Friday we saw that ULTI was down 2% and YMAX was down 3%. Okay, chat, if I'm wrong in my chat, please let me know, everyone. Okay, so that's what we saw, right? YMAX was down a little over 3, ULTI was down around 2. Okay, so that was very encouraging for ULTI. I thought, all right, this is great. We've been doing a lot of videos on ULTI lately, obviously, Marcos and I and other YouTubers, and I don't really know what other YouTubers are doing. I can't speak for them, but Marcos, I like him because he gives the facts, and he showed the returns for ULTI, which were around 27%, and he showed a lot of the holdings and the risks. So that's why I do podcasts with them. But YMAX was down 3%, and a lot of people thought that ULTI was more risky, like it would have a bigger drawdown. YMAX was down more. And this is a new risk that I've identified, and I wanted to share it with my viewers today. All right. I was alluding to this in my members only video this morning. Okay. We also have our portfolio service here. You can see my portfolio at any time. You can follow my fire portfolio, and if you want alerts on my portfolio, they're all here in the membership section. And I was telling my members today, please stay tuned for today's video. The risk on ULTY and YMAX, I've identified a new risk. So the risk to me is, I don't know if a lot of people are talking about this, but to me, the risk with ULTY, as we go back to Yieldmax's website, it's not just the holdings within, okay? And we already talked about the high risk with ULTY holdings. It's more so the risk with YMAX lately. If YMAX was down 3%, ULTY was down 2%, what's going on with YMAX? And I would say that, you know, when we started out with Yieldmax, we had the fund of funds with YMAX, and here are the holdings for YMAX. You could see that they had mostly Mag 7 names. Now they're adding in other ETFs that are somewhat questionable. You know, they've been adding in things like Roblox, D-Ray, you know, DraftKings, Snowflake, Carvana, okay, AIYY. All right, you could go into all the holdings here if you want and view them. Look at the holdings for YMAX, okay? Let's just open this file. And you'll see that YMAX used to be somewhat conservative, okay, and had, like I said, those Mag 7 names. But here you look in here, you see the Carvana, you see some Alibaba. Okay, he wants, I think, you know, pretty much equal weight, right? Look at these weightings, around 3%. You have, you know, yeah, all around 3%. Let's say Maro, that's a pretty small market cap. That's only 2.94, but that is Bitcoin. That's not index. So you have these holdings of YMAX that are not that high of quality because they've been adding new funds lately that were just more, I think, for the meme craze, more for the excitement of the AI, you know, race, and, you know, all these new growth themes that you're seeing, like DraftKings, online sports betting. These are mega growth themes, but these aren't large index players. And so that's going to create more risk and volatility with YMAX. And also YMAX had its ex-dividend date. Okay, so you have to be aware of the ex-dividend dates dropping the stock more than what it looks like. But I want to identify this risk with you anyway, because look at the holdings within HOOY, Robinhood, again, MRNY. These funds were added later to the mix. And at first, YMAX was the fund of funds. It was safe, had the Mag 7, as I said. Now it has riskier names. So just something to be aware of, because the drawdown was significant on Friday, even if you're factoring in dividend X dates, okay? You have to be aware of the holdings within YMAX. They are getting a little bit more speculative. Now, YMAX is going to be adding new holdings. Okay, my members in Discord, okay, they've showed me all these new holdings coming out with YMAX and all these other funds. Okay, there's a slew of funds coming out, and I love my Discord community because I think it's the best Discord community in the world. We give you the Cornerstone rights offering announcement here in Discord, and we'll get to that in 1 second. So yeah, we have a Yieldmax channel here, a Canadian channel, an Australian channel. We have everything you can think of here at this Discord chat room. A crypto channel, how to retire early. We have a military members channel now. Just started that, and that's been pretty active. And we have, you know, options, 401ks, again, you name it, okay? That's the first risk to YMAX, is it has new questionable holdings that I don't necessarily agree with. I mean, I don't mind them being in the YMAX fund, and I love YMAX, but I don't necessarily agree you should put a lot of your money behind YMAX when you're retiring just because you think it's the index and it's diversified. Again, it's diversified now with more speculative holdings, so keep that in mind. The other risk to be aware of with Yieldmax and ULTY, of course, is the higher maintenance, 50%. And I had a text from a member, okay, I won't say his name, but all of my members and I are very close with our texts, okay? If you text me, we're close, and I have hundreds of members in my text, thousands even. And now it's just getting to where I'm a bit overloaded with the script requests, but other than that, I'm still answering all questions beyond the script requests. I'll get to all the scripts in one moment. So now give me a couple days. So one of my members was mentioning that at Fidelity, they raised the maintenance. Okay, I don't think he would mind. I'm just going to shout out Joe on this one. Thank you, Joe. You know, there are a lot of Joes, so hopefully he doesn't take it personal. But Joe, you know who I'm talking about. All right, and he was mentioning this maintenance change at Fidelity. Okay, I don't know if that's happening to other members, if it was just him. So it would be nice to get some feedback on that in the chat. But also, this maintenance change is quite deadly. All right, because yeah, I mean, maintenance is how I live financially free out of my brokerage account. And that's why I kind of like E-Trade because they already have pretty high maintenance. But if you were to get a maintenance change on you, then how would you react? And so I don't really like it when watchers, viewers of my channel, buy a lot of YMAX or ULTI. This is a big risk, risk number 2, when they have low maintenance at their brokers, at Robinhood, at Fidelity. They had lower maintenance, IBKR. Then we find out that you get the maintenance changed on you. So you're using a whole bunch because you thought you could because it was low maintenance. And I'm telling you, maintenance is the key to not only living free out of your brokerage account, but it's the key to managing your risk. Okay, high maintenance means high risk, but it also means it's harder to withdraw out of your equity. If you need help understanding maintenance, that's in my volume 3 e-guide. So for every $1 you put in your account, you get $4 of purchasing power. If you're new to this channel, $1 here, 1.6 million, you get $4 of purchasing power. Here you see purchasing power is 1.5 million. It should be over 4, but I've obviously invested a lot of my money and it's here in margin as well. So I've sucked up a lot of my equity, but I don't do it in a way that threatens me with a margin call. Okay. And if I were to get a maintenance change, then I still would be okay. All right. I know which levers to pull. And also I have so much equity at such a high cushion. All right. This 344,000 of withdrawal that I could withstand a maintenance change. And also I keep my position sizes small for Yieldmax. Okay. So that's how we're not going to get in trouble with a maintenance change. If they change the maintenance for every fund out there, I've already thought about this, members and I have debated this point. Well, obviously they wouldn't be in business anymore. If brokers changed the maintenance for all of their funds, once again, and raised them all, everyone would be in a margin call. No one can invest in anything. There would be no such thing as equity. There would be no such thing as real estate, in my opinion. All these things, it would be hard for the world of finance to exist without equity. And if you raise the maintenance on everything and you can't tap equity to anything in this world, well, then this world wouldn't really be possible under the same norms that we've been accustomed to with capitalism. So you have to keep your maintenance somewhat low so you can draw off the equity. And so I don't think that that's something that you have to worry about if you're not over leveraged. And also these things do happen from time to time. E-Trade had a maintenance change once, but again, it didn't affect me because I'm always watching my position sizes and I'm always understanding maintenance and my equity, which again is in volume 3 if you don't understand maintenance. All right, so we talked about the first risk with YMAX and ULTI. This is the second risk, was a maintenance, higher maintenance with these funds and putting all of your money in them because you want to retire on them. What if there's a maintenance change? Spread your money out. We talked about the holdings with YMAX, okay? The holdings, you need to be aware of that risk, okay? So be aware of the maintenance with Yieldmax, be aware of the holdings of YMAX, okay? Obviously be aware of the holdings of ULTI because they're quite risky, but ULTI can swap out holdings whenever it needs to. YMAX cannot swap out holdings just, as freely as ULTI can because ULTI, they kind of have the freedom to do that in their perspectives, whereas YMAX is meant to have all of the funds for YMAX. It's the fund of funds. So also keep that in mind as a risk to retiring and putting it all in ULTI. I like to retire on my dividends. I retire on all these funds, but I don't retire all in on these funds because of the risk that we've already stated. Okay, another risk, this one I don't really need to point out, is just the drawdown risk. I didn't point that out at first. I pointed out at first the holdings, which give it larger beta swings on down days, larger drawdowns, yes, but I wanted to point out the holdings of YMAX, which are perceived to be safer, are actually now getting more risky, okay? And it's not, it doesn't make ULTI look as risky anymore, okay? They both have questionable holdings now, but ULTI can be managed within. YMAX cannot, so keep that in mind. Watch your position sizes. Also, we talked about maintenance, okay? That's risk number 2, okay? And then risk number 3, we're gonna mention just quickly the drawdowns, okay? We saw the drawdowns in YMAX and ULTI. Look at this drawdown here, okay? It can fall much bigger than the markets on a given down day because it's not totally diversified. Same for ULTI, all right? Also, ULTI, it has drawdowns that are larger than YMAX, so keep that in mind as well because they have higher beta names. Now they changed their structure, but still, we saw a larger drawdown. Go watch Marco's video once again because he put up the charts for ULTI and YMAX and you saw the bigger drawdown for ULTI. So you're going to see a bigger drawdown with ULTI than YMAX, typically speaking, but now you may have more of a drawdown with YMAX because of the holdings that they've added into it. All right. Now, the drawdowns, you have to understand, we stay indexed, okay? So that's why I focus and put so much of my money in Cornerstone. Cornerstone has less drawdowns. Okay, look at the last 5 days of Cornerstone. Okay, 5 days here, it was pretty flat. Okay, it beat the market again on Friday. It beat the NASDAQ. But on a 1-year chart, you see that it can have big drawdowns, but that's because you have to play this properly around the rights offerings. Please keep that in mind. So Cornerstone, this wasn't a market drop here. This was the N2 filing. That's why I kept it here on this channel for Discord, because this is why Discord's so valuable. People, want to know about the value that they get with my e-guides. Of course, you get all the e-guides, which are a value in themselves. I'm sure most of my members will attest to that, if not all. But we also get Discord, which is I don't know if it's the biggest value of all, because you get the Cornerstone rights offering announcement. I mean, that's worth millions of dollars if you play the Cornerstone rights offering properly. All right, that's how I went from 15,000, to $1 million in my account. It was with Cornerstone, and also leveraged vehicles, which we'll talk about maybe in a little bit. So that's why this channel is so valuable, and we got the announcement here for the N2 filing, which precedes the RO, which I talk all about in my Volume 4 e-guide. So we got the drop. This was the announcement at Discord, the N2 filing, and we bought a ton. We sold out here and bought a ton at the lows, and that's how I really gained more performance on the upside, was playing Cornerstone properly after the rights offering, okay? But keep in mind that Cornerstone's no different than other closed-end funds. It has rights offerings, but Cornerstone's different in that it is a 4-star fund, as you can see on Morningstar, and 4-star right there. And it moves up or left or right on its chart after you factor back in dividends. So please don't give me any arguments about Cornerstone's NAV dropping or something. It follows the S&P's NAV largely, which is why it tracks the S&P here and even outpace it if you play the RO properly. But the other advantage you get from Cornerstone that's not like other closed-end funds is you get the drip at NAV. We get the 20% dividend in Cornerstone and the 20% drip at the NAV, the 19.55% gains every month on top of the 20% dividend every year. The 20% dividend is for the year, paid monthly. And then you get 20% gains on top of that dividend every month. Some months we get 30% gains, 40% gains, because the premiums can be much higher in Cornerstone. I've been in Cornerstone and my average premium was 30%. So Cornerstone is still cheap in my opinion. I've been adding to this, my members know, but this is how I get a lot of my capital gains exposure, and this was also how I stabilized my account in down markets, because YMAX and ULTY fall hard. Cornerstone does not fall as hard typically on down days. That fall that you saw was from, again, the rights offering, which we all played at our Discord chat room. That's what's so great about it. So again, if you need help playing Cornerstone around its premium thresholds, that's in my Volume 4 e-guide. Cornerstone is also how we get these capital gains, as I just alluded to. And so the next risk that I want to discuss with ULTY and YMAX, because we just talked about the drawdown risk and how Cornerstone has less drawdown risk, and also dripping YMAX at the highs. People want to drip Yieldmax, YMAX, and ULTY around the highs. I only drip Cornerstone for that advantage at the NAV, okay? The 19.55, they're dripping at the lows. Yieldmax is dripping at the highs for you on an ex-dividend day drop, which is an artificial drop. That's not a real drop. Cornerstone's giving you a real DCA, a dollar cost average, into the lows, even without a market drop. But when the market dropped in 2022, Cornerstone was dollar cost averaging for me across the lows. That's how I outperformed in 2022. So that's another risk with Yieldmax and I didn't even have that slated as a top 5 risk, which was dripping at the highs. Okay, I only drip Cornerstone for this distinct advantage. But again, play Cornerstone properly around the premium thresholds, as I said in the earlier before this part in the video. So I have less drops with Cornerstone, more stability with my NAV, of my portfolio of NAV with Cornerstone. I have less volatility on down days. The drawdowns in YMAX and ULTY are much more. Cornerstone's drawdowns only happen like that when the premiums are too high, which is a good problem. That's when you're supposed to box it, which we talk about in Volume 5. And that's also how I'm outperforming the market. It's Cornerstone drips at the NAV. It doesn't just, it not only falls less in a down market typically, but it drips at that NAV, giving you extra gains at those lows, giving you that outperformance. All right, so the fourth risk to Yieldmax and ULTY, okay, that a lot of people don't discuss either, all right, but I discuss all the time, and I was just alluding to this with Cornerstone. It's a perfect segue here. That is that you don't have capital gains appreciation ability with ULTY and YMAX. They're capping the upside in exchange for income, which is great. Okay, that is great. Now, I'm going to go ahead and move into the fifth point, but I mean, this is easy to understand, right? I mean, look at the chart. It does not move up. You're only getting dividends instead of days gains. Okay, so there's ULTY we just saw, and then YMAX. Look at the chart. It also doesn't move up well. Okay, so you're sacrificing days gains for income, and you get a little bit more movement sometimes out of YMAX and ULTY, but you're still sacrificing your days gains ability and compounding ability. You get days gains with these, like you're at 1.56 with YMAX, but you don't get compounding for the year on the cap gain side. You only get daily gains with your cap gains, capital gains. So that's why it's important to have YMAX, by the way. I get my growth with it. How are we up 33,000 today, or 1.63%? As you can see above, that's beating the indexes, because when you factor back in my margin, we're beating the NASDAQ. We'll be up over 1.8. We'll be up closer to 2% if you factor back in my margin. We can duplicate this tab here, and you can go in and see in my complete view here that with margin, we're up 2.15%. Okay, that's beating the indexes. How are we up this much money? Okay, it's because YMAX is up 1.56%, but it's not going to be up for you on a yearly basis. Okay, it's not going to compound like Cornerstone is. Okay, Cornerstone we talk about in volume 4, but we also have the triple C's, which are the leveraged funds that I combine with Cornerstone. Cornerstone being the C's. That's volume 7. The market's at the highs. Okay, Cornerstone, look at this move it's had off the lows. The market is at the highs, so we have to be talking about risk in these funds today, because we've been talking all about how to retire on these funds naturally, and look at the market being at the highs like it is. We should be talking about the risk, because we saw what can happen with these funds last Friday. 3% down for YMAX, 2% down for ULTY. Again, don't forget to factor in ex-dividend dates. So SPY, the market's at the highs. All right, how else do we manage our risk? Again, we box Cornerstone near the highs, but we're not boxing Cornerstone yet, because that's not, the premium level that I box at. But we definitely redid our put options for the S&P and the NASDAQ. Cornerstone and closed-end funds don't have options, but we use options for the indexes themselves, SPY and QQQ. If you need help hedging your portfolio like I do, that's in volume 5 as well, along with boxing Cornerstone. And the key with our options, they're up 100% on Friday. The key with these options is we just put a small amount on each month as insurance, like you would with the house. But if the market has a huge downturn, you're going to see them move thousands of percent. Okay, they were up 100% on Friday each, and they've been up over 1,000% in one day when we have these bigger corrections in the market, these flash crashes. All right, so that's also how you hedge ULTY, by the way. You can hedge it with YQQ, as we always say. You can hedge it with SALTY once it's released. But for now, in my opinion, you have to hedge with ULTY, especially if you're using a lot of money with ULTY to retire on. However, as we just stated earlier in the video, you could have a maintenance change, all right, and that would really mess up your retirement plans. Okay, maybe you don't use margin, but maybe you sell options like I do to get extra income out of your account. Okay, these options, I sell them and they lower my margin by $50,000 to $100,000 because they are naked options. Naked meaning, in my opinion, safer. I mean, I don't know if people run from when you say naked, like, oh man, these sound like some scary options. They're not covered, they're naked. No, covered is actually more risk to me, because the broker is covered, but you're not covered. You have to own the shares to sell the call. And what if the market falls and you're owning those sold calls, the shares for selling calls? I like naked puts because you don't have to own them, and then they just lower your margin. Instead of controlling the same asset, you lower your margin, you lower your risk, you lower your cost basis. Look at BitX. We had it at 70, now it's at 20 because we received $5,000 for clicking a mouse on BitX, and times 5 contract, that's $25,000. So instead of owning Bitcoin outright, I have these puts and I still get my days gains. Look at these gains that we're getting today from Bitcoin and Soxel and all those. But we don't worry about days gains and losses and options. We're going to just collect our premiums no matter what. And if we get assigned at the lows, well, then we just make more money going higher. And it would have to take, it would require a huge drop in the market to get assigned in some of these puts. They're extremely conservative. And I don't know why more people don't talk about selling puts. Warren Buffett sold puts on Coca-Cola. Okay, go look at that Forbes article. He's a very conservative investor as well. If you need help selling put options like I do, that's in my volume 6 e-guide. So yeah, I have a lot of things that I do in my portfolio. I have a lot of, strategies with options, with hedging, with protection, with Cornerstone, with margin itself, with getting gains, like with the triple C's. And I can't talk about them in every video. So I point people to my e-guides, which I never had when I started this channel. Okay, my members had questions about each of these subjects and how I outperform the market and live free out of my account. And so I wrote those as demand requested it. And also, we have 500,000 of margin leverage. And, a lot of people were wondering how I negotiated my rates down. So I sent the script to them. Okay. You have my number when you buy my e-guides. I will get to y'all when I can, but I'm prioritizing members first and the members only videos. Okay. Because obviously they paid, money to be with me and follow my portfolio, after they bought my e-guides. And I'm very thankful to them. And so I'll get to them first and then I'll get to everyone else after. Please be patient with me. I have your numbers. You texted me. Okay, I'm leaving them as unread for now if it's script related. And if you have any other questions on top of that, please just text me that question without the script in the headline so I can know that it's not the script. Okay, some of my members are already catching on to that, and I appreciate y'all doing that. Look at this. I mean, I have over 173 texts there to get to. Where does that show? 173, and I don't want to show y'all their numbers and stuff in there, but because there's a lot of personal information, but those are just texts for scripts. Okay, so I will get to y'all. Don't worry, and just make sure you have a question that does not look like the script, and I will answer it right away. All right, so we're living financially free out of our brokerage accounts using Cornerstone, Yieldmax, and some margin. We're outperforming all of the indexes, up 17% for the year if you want to round. And we're earning over $700,000 in dividends. We're living financially free from 9 to 5 out of our brokerage account, because I say a brokerage is actually how you can live out of an account without getting penalized like you would in a Roth or an IRA. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. I use my credit card, by the way, my E-Trade checking card, to swipe and go wherever I want in this world. And also, when I do that, all my bills are automated out of my account. So that's another reason why I keep stressing a brokerage account, okay, to do this with. All right. Also, you can head to my website, Unconventional Wealth Ideas. We're leading the FIRE movement, as I always say. Okay. And here are my testimonials if you ever want to check those out. All right. So remember, when you buy my bundle, okay, not just one e-guide, but my bundles, then you get Discord access and my phone number for life. Discord is where we alert you of the Cornerstone rights offer announcement. And then we have a plethora of other channels here for your enjoyment if you ever get the chance. So let's go ahead and get into the chat now, and I'll see if there are any questions that need to be answered. Once again, I appreciate all my members. Hey, Justin. Hey, FOMO. Thanks for saying to pace myself. I don't want to get sick, and, I have to make time for myself and my family. You're right. All of y'all are right. Thank you, Sully. Thanks, Justin. But I have to make sure everyone's protected. Those are the 5 risks to retiring early on ULTY and YMAX, and we just discussed those 5 risks, okay? Let me make sure I didn't miss anything in there in those 5 notes. We talked about, well, of course, there's one more risk, okay? 5th risk, okay? And that was dividend cuts. These things cut their dividends, obviously, and, I thought we kind of already knew that, but YMAX and ULTY will cut their dividends if you're trying to live off of them. They'll cut their dividends, and then obviously you have lower income to live on. And if you get a maintenance change with that, you're really put in a tight position. So watch your position sizes. Don't rely solely on those. Rely on things that don't cut their dividends. Cornerstone keeps its dividend the same for the year. Okay, they reset their dividend every year as a function of the NAV of what the S&P and the NASDAQ were doing. So there's no such thing really in my mind as a dividend cut or raise with Cornerstone. It's just whatever the market was doing. It's 20% for the year. And then you get the drips at the NAV every month. Whereas with Yieldmax, they could cut their dividends. So that's the 5th risk, okay, that I wanted y'all to all be aware of. Don't get caught in that pickle of dividend cuts in a lower market, in a bear market, with a maintenance change, especially. Keep your position sizes small in these. I have to make sure all of my members are aware of these things. All right, so I hope you enjoyed this video, everyone. I know it went a little long as we got into the comments, but I had to lay out these 5 risks to retiring on ULTY and YMAX, okay? I hope you consider these risks, and I'll see you when I do another video, okay? In the meantime, give me a call. I'm here for you. All right? Take care, everyone. Bye-bye.